Hello guys, sorry to be late. I have some problems with the camera, but it's working right now. So I will be short in this live. I will just try to explain the subject, which is how to protect your trades using a stop loss. I understand that most of the people, they know what is a stop loss and what is the uses, so we try just to speak in general, but I will give you some other things that most of the people, they don't know, because there are a lot of changes in the brokers. So please guys, if you are not subscribed, please subscribe to channel and share my videos please with other friends, at least they get some information. Now let's begin with stop loss. Now, why do we call it stop loss? It's very simple. Trading is to bet on a stock. Either you do day trading, or you do scalping, or you do swing trading. Is the same thing, the same principle. Okay? Even with investing, which is a very long time, like many years or decades, but sometimes you have to decide. Okay, sometimes you have to decide. I will give you an example that this kind of stop loss, you can even use it in investing, although because stop loss, it's about the price. Okay, how much you lose. I will begin with investing, and then when I finish, I will go with swing trading and day trading, which is mostly are the same. So in investing, I know when you want to search for companies, you have to see fundamentals, you have to see industries that you like, and you should see the mainstream, where these stocks are going. And then fundamentals, it means you should see this company earnings, you should see the competition, and what do you think, or what the other analysts think about this company in 5 years, 10 years, 20 years. Do you think that this company will make money? It means you want to buy a company that after 5 years, 10 years, it could double or triple or become bigger and bigger and bigger. This is your goal. Okay, is to make money. This is called price appreciation, and you want dividend. Okay, now let's say you have 10 companies in your portfolio. 10. Now I'm speaking about in general. You have your own portfolio for yourself. It means you did it by yourself. Now you see, for example, hello Saba, how are you? Sorry to be late. So understand, for example, you have bought 10 companies, and you add always you add shares each year. You add some shares, or whenever you have money, you invest, because it's a habit, as I told you before. So you are investing. You will find, for example, that most of the 9 companies are doing well, but you see a company is always doing bad. You begin to lose 5%, 10%, 20%, 50%. Now, when you reach that price, 50%, it means whatever you have put in this stock, 50% has been lost. And you see that the market is good. So here, or the industry, it is good. It means the industry, most of the stocks are going up. So why this company is going? So you take a decision to sell your shares and to invest in another company, and you take the loss. Okay, this is a type of stop loss. It means if you continue, because there are some companies I have given you before, if you can remember, those who have been with me many years, you can, for example, you can see for example, Sears, and there is another company, JCPenney, okay? You see that, for example, Sears, it was $195. It was doing excellent. I go to this Sears, I buy stuff. I go to JCPenney, I buy stuff. But I see that the stocks are going down, going down, going down. That's why 2 years, 3 years, 4 years ago, I began to ask my friends and to ask my students that if they have shares for investment, try to be careful because this company is not doing well. Now for me, I don't have to go to the fundamentals because for me, I don't care about the fundamentals. Because if the fundamentals are bad, the company will sink. How do I know that? I know from the price. I don't need. For me, I'm not saying predict, but I am sure that this company is losing business. A stock that it is $195. Now it is $10. What do you think? What do you think this company will go? What do you think about its future? It was $195. It means that most of the investors, most of mutual funds, they sell this company long time ago because they know better than me. But for me, I know better than anyone else because for me, the price gives me everything. I don't need someone to tell me what did happen to this company because most of the understand that most of these CEOs, executives, they always say good about the company, although their company is sinking, because they can't say bad. Because if you say bad about your company, a lot of people, they get scared and they begin to sell. Now, when you begin to sell, hedge funds, they go and they sell short these companies. That's why they go too much down and they will go to bankruptcy. Hello everyone, hello free trader. So now this is about investing. It means you see that your investment is not doing well. All the companies, almost all the market is in a big trend. This is how do you know? Okay, you see that the market is doing good. You see almost all the companies are doing good, except for your investment, which is doing bad. So you understand that your company has something wrong. That's why investors should look every 3 months when we have the earnings. They try to see what's going on in terms of earnings, in terms of competition, in terms of new things. Does this company is growing better and better? Does the sale is growing faster and faster? It means you know better than anyone the company because you are investing in it. Okay, so that's one thing. And when you take the decision and you see that the company is still going down, you are sure 100% that this company will go bankrupt. Now this is for investment. Hello, Fabian. Now about swing trading. Understand that swing trading, it is based on the daily. It is based on the daily candlestick. So if you bought a candlestick, whatever you bought as a price, understand that if a few days later the price is going down, what does it mean? It means the trade is against you. It means the market tells you that you are wrong. Now, if you want to stay, it's your problem. But for us, we try to limit the loss with a stop loss and exit. Now, why we exit? Because we begin to lose money and the loss doesn't stop. We should stop it because the market will not exit your trade by force. Okay? So understand that it is your money. And the broker, it means he has no relation with you. You buy a stock, it go down, it go up. He doesn't care what you are doing in your account. If you lose all your money, he is not going to be sad or to be happy. He doesn't care because it's not his business. His business is that you do a lot of trades. That's how he makes money. Boofman, hello, everybody here. So understand that the broker, he is just a medium between you and the exchange or this market makers. Okay, he's making money because of you trading. That's the main thing. He is here. He gives you a service in order that you get to contact the exchange, and in the exchange we have market makers, so you can buy, you can sell. Because when you buy and you sell, is you buy from a market maker and you sell to a market maker. So the broker has no relation with your business. Now, if you make money, let's say you make 100% this year, or 200%, or 5%. No, you are not going to give your money, to your profits, to the broker. You say, thank you, my broker. He is very nice person. No, you will not do that. Now, if you lose your money, let's say you lose 20% or 30% this year, and it was a bad year for you. You have been trading bad stocks. So the broker will not be sad, and he will not help you, sending you what you have lost. And he say, oh man, I am very sorry that you have lost $10,000 or $5,000 or $100,000. You have lost, so I will be generous and I will give you money because you lose. No, okay? So understand that a broker has nothing to do with you. So this is business. He is here to help you get to buy and sell stocks, but he has no way going to interfere with your business. If you make money, it's yours. If you lose, it's your loss. That's why we make a stop loss and we exit the trade. Now, you can't just exit the trade because for me, I buy at the end of the day. It should be tomorrow and a few next days, or 1 week or 2 or 3 or 5 weeks. It depends. And sometimes this stop loss, you want to exit at certain price. If the stock, if the trend has finished and the stock is going down, you want to exit. You put stop loss and you exit at that price. Okay. Now, what about day trading? Now, in day trading, it's the same basis, but with shorter time. For example, if you put 2 minutes candlestick, or 3 minutes, or 5 minutes, or 10 minutes, understand that when you buy, and if the stock is going down, maybe they are shorting it, you are going long, and you begin to lose money. So you should decide to exit, because if you continue, let's say you put your stop loss at 1% or 2%, but you have reached 1%, 2%, and you are going down and down and down. Okay? Saba said, what about mental stop? Yes, we are going to show you that. Right now, I'm just speaking about the ways. The ways you can exit. Then we can go to what kinds of stop loss do we have. Okay? Now, if you use, for example, a 5%, let's say a 2% stop loss, just by percentage, you put stop loss. If you reach that, you exit. Or you say to yourself, if it reaches that price, I will exit, and you are watching your trade. So why we use stop loss in the first place? We use it in order to stop your loss, because if you continue, you will be losing more than what you have decided. And this is very, very important to know and to understand, because if you don't understand this, you will be a loser in the big year. At the end of the year, you will be the biggest user in the stock market, because you don't care about your money. You always lose and lose and lose and lose and lose. At the end of the year, with 10 or 15 or 20 or 30 trades, you will be out. You will have no money to trade. Because at first you see that 2% or 5%, 10% is just little. But understand that this 5% you multiply by 20 or 20. For example, you multiply by 20 trades. 20 by 5, it is 100%. It means if you do 20 trades, most of them are losers, you will be losing all your money. This is a fact. And this is calculations. That's why when I teach people how to do stop loss, it is all about calculations. It's not just because you want to just to exit a trade. No, all these are calculations. If you don't calculate the stop loss, you will have a real problem. Now, if you go to more or a shorter time, like other kinds of trading, you understand that it depends on how much time you want to stay and how much you want to lose in a trend, like a risk. Okay, so understand that you should always calculate. Now, the question is now, do we have to put a physical stop loss? Now, this is a big question, because brokers have changed and they don't control anymore the price. It means where you exit. This becomes a problem now in all brokers. Now, I will tell you the past before, and I will tell you what did happen now. Okay? So, before, when you put a stop loss with a stop loss, it means an order. So, when the price has already reached that, it means the price has been bought or sold at that price, you exit. It was very, very fine. But many years ago, this has changed. So when you put a physical stop loss, what will happen is that most of the time you exit. But you exit with not the price that you put. For example, let's say you bought at $20. Okay, you bought at $20, and you put stop loss at $19.90. 90. It means your stop loss is 10 cents. Let's say you are doing day trading. 10 cents, you say if it hit. Now the problem is that you find the stock, the bid and the ask in general, let's say it is 10%. After a few moments, you find you exit the trade, but you exit with the price $19.98. 98. And you ask yourself, well, I put the stop loss at 19.90. Why I exit at 19.98? Normally I should exit when the price is really there. But this is the trick that the change has done, and now most of the people who put stop loss, they exit their trades, and although their trades are good, it means they don't go to that price, but they find themselves exiting the trade without any reason. It happens to me before, like 2 years or 1 year or 2 years or 3 years ago, and I called my broker. I say, okay, I put stop loss at this price, but when I exit higher. Now, if you exit worse, it's okay, because when people are beginning to sell short a stock, it can go very, very quick. And for example, if you put 1990, you can get 1985 or 1980. Why? Because there are a lot of people, they sell short, and they say a lot that the price goes so quick down. This I understand. But when you put $19.90 and you exit at $19.98, this is not my price. This is not my stop loss, because I don't exit at that price. I exit at $19.90 or down, but I don't exit at $19.95, for example, 96, 97, 98. I don't, because I am okay with that price. I don't want to exit. And this what has happened, and this is what will happen. And guys, you can notice that whenever you want to put stop loss, they exit you. You know what? Because the brokers, they get profit from that, because they want people to trade a lot. They can't push the people to trade a lot. So when you are in a trade, you enter, you put stop loss, and then you exit. It's like a game. So it's like the software that the brokers are using now. It makes you, it means it executes the orders because of the lot of bids. Because understand, if you want to see trading into level 2, you will find a lot of askers and a lot of bids. So it's not only one bid and one ask. You find a lot. So the broker doesn't care, because the software sees the low and sees the high, and this is a bad execution. But understand that this is the way now. This is the way now. There is no way what to do. What can you do? There is nothing to do. Because whenever you put stop loss, they will try to make you exit the trade. But they give you a higher price, and you don't want to exit at this higher price. So this is a biggest problem that I see in these years, and there is no solution, and you don't do nothing. Either you apply what they ask, or it's not their problem. You say, okay, the bid and the ask was there, so we sold according to the bid and the ask. But you tell them, okay, the price today has not gone. For example, the whole day the price has not gone to 1990. How can you sell my order? It means you execute my order at 1990, and the low of the day is 1995, for example. So you say to them, the stock doesn't go that way. So how can I exit? Show me where you find this. There is no. They told you it's because of the bids and the ask. This is the new way that the I don't know if it's related to market maker but the one who profits from this is both. The market maker makes money, and the broker makes money. But right now, there is another thing that happens right now. Since most of the brokers, there is no commission, so it doesn't matter, because they send this order to market makers, and he does what he wants to do. He just see the other market makers, and he can choose anything, and he can sell, buy, and then you find yourself exiting. And there is some money that goes to the broker, some money goes to the market makers, and they play as they do. But understand, guys, that you can do nothing. You can do nothing in this situation. And I have seen this situation a long time ago, like 2 years or 3 years ago, and there is no solution. You can't go and fight with market makers or the brokers, what they do right now. So it's like this. So another thing that you can do now is what we call mental stop loss. Mental stop loss is, you say to yourself, okay, I bought at $20. My stop loss is at 90 cents. 90 cents. If you see that the stock has reached that price, I exit. But the problem for us as swing traders, we can't go ahead and stay one day looking at the stock if it goes to 1990. Now, there are some solutions. You can use alerts from your broker and you put it to your cell phone from your broker's app. You can sell. You can have the alerts. They are free, I think. Most of the brokers, they have free alerts. It means an alert at that price. You put the price of the stock that you have. For example, you said XYZ. The price I want, if it reaches, you send me an email or you send me a notification or text message, whatever is the broker is doing. It is at 1990. Now, even if you are at work or you are working or you are sleeping or wherever you are, you get a message, then you open the message and then you go to your broker and exit the trade. This is one solution. Now, for day traders, it's very easy because you stay watching your trade. So whenever you see, you exit. So it's very easy for day traders. But for swing traders like us, it's very, very difficult. So this is all about how to protect your trades. And there are other things how to protect your trades, but not with a stop loss. This has to do with management of your account. This I will speak about in another session. So let's see. Roof Boofman, he said, when you succeed in a trade, what is the best way to follow trend without giving up profits? Do you explain this in one of your video lessons? Yes. Roof Boofman, there is a training called training level 7, how to follow the trend. I explain how to exit a trade, or you can do a subscription. Let's say silver or golden subscription for 1 month. You go to at the end of March or beginning of April when we buy a lot of stocks, and you see I buy some stocks. I stay 1 month, 2 months, 3 months, and then I exit them. Okay? So you will find them all explained. I do weekly videos in the weekend, and when I sell or when I buy a stock, I do a video at night in one of the days, like Monday, Tuesday, Wednesday. Sometimes I don't do because I don't exit. And I always explain why I exit at price. Even before I exit, I say next week, if this stock goes to this price, I will exit. And I explain why. Because these explanations are techniques that I use. It's all in the chart. I will show you by the chart why I exit. But it doesn't mean that I will be right 100%. Sometimes I exit and the stock come back. I will buy it again and I will say, guys, I sold it here because it has gone too much, and then it comes back and I'm buying again. Then I will have another trend. So it means that the trading, it is not you should be stubborn and you should be fixed. You should be flexible. You should be flexible with your trading, but you have a firm. It means understanding why you exit. Because for me, I exit when the trade has stopped. Well, when the trend has really stopped. It's not just because of a correction. Like a correction. Like when the stock goes 4 days or 5 days, it should go 1 day or 2 or 3 red. It doesn't mean that whenever it is red, I sell. Because I will not stay in the trend. Okay, so this is all of you knows, and most of the people who are with me or take my training or they see my training or they buy ebook or they will find this information. But if you are interested, either you can see the practical of thing. You go to my trades and you see why I buy and why I sell into a concrete way. It means, for example, when I buy by my rules. I don't know what will happen in the future. So you will see how I behave. Because trades, there is no a sure thing about any trade I do. So you always bet according to your knowledge, according to your criteria, according to where you should buy, which is a precise points where you buy. It's not just to buy at any price. Okay? And then even when you want to exit, for example, this year we bought Tesla, we bought Facebook, we bought Apple. We stayed 4 months, 5 months, 6 months, and then I sold them. But why I didn't sell them in 1 month or two? When you see the trend of these stocks, I will tell you, no, I will not sell here because this and that and that. But I don't use fundamentals. I don't use because someone tells me he is always thinking too much about. He reads too much about Tesla. Whenever I speak to him, he told me, "Oh, because Tesla, there is a battery day. Because there is this. Because it will." I say, I don't trade these. I don't trade what the people say about a company or about executive. What does he say about his company? I don't do that. If I do that, my training will be changing, and I will be doing something else. Maybe I will be doing investing, but here I'm doing swing trading. So you must understand how I trade. It's all in the chart. I don't use anything than the chart. Okay? So understand that, and you should understand how I trade. Now, when you understand, you should practice. You see me practicing. That's why the guys who have been with 6 months, 1 year, or 2 years in subscriptions, they get to know everything I do, and they practice. It means when I buy a stock, they see it. It means I can't lie. I can't say to you, for example, oh man, okay. Oh, I bought Tesla at 250, and now I sold it at 2,200. Everybody can say that. Anyone, you find them online. Everybody. But you show him in the day you bought Tesla. Show me the video, or show me your account that you have bought in this day. But for me, I show it by video. I say today is Monday. For example, 5 of October 2020. I bought Tesla at this price. Now, why I buy? I give the reasons. Now, after 5 months, I sell Tesla. I said, okay, I have made 80% or 100% in this trade. Now, I sold today. So you see it. So I can't lie about this. That's why the people, when they go to my training, they see what I am doing in true. If I lose, they see I lost money. If I make money, they see it. So it's always a true and real thing. Most of the people, they can't do that. Okay? They can't, because it's a big responsibility to have an account and to show to the people how you trade, and you see the account is growing up. This year we grow it up until 140%, and then we have a problem with this paper trading about the what we call the split, and then I delete this the first account, and the other account with what we call the investing is just because they didn't give us our money because the software doesn't work. I'm speaking about paper trading, not the real trading. Okay, that's why now I'm searching for another account that the account changes by splits and by thing. Okay, so let's see another thing. You exit before next resistance. No, not really that. You need to read chart like a book. Yes, but you see that when you see a chart, it depends. For example, if you go to see my chart, you find one line or two or the trend, or I do it by myself, but you will never find other things that I use. I don't use volume, for example. I don't use it. A lot of people, they told me, oh, the volume, how don't you use it? I don't use it. It's worthless for me. I have never used it and I will never use it. The volume. Some people think that it is something, but I explain to them why it is not. Why it is not, and it doesn't give you nothing. Let's say moving averages. Moving averages, when you change the days, the line changes. So it's not correct. You change 50 days to 200 days to 100 days. Whenever you change, the line it changes. So it's just a game of, it's not. I don't do that because my criteria are more precise than these lines, than these moving averages. I don't use indicators also. All these indicators that you see, we have almost more than 300 indicators that are created by traders before and published in books. I don't trade them and I don't use them. They say to me, why you don't use this? Why? I say I don't, because I know they are useless. You use them, it's your problem. And there are clouds. I see clouds in charts. I see waves. I see, man. If you continue to use these things, you will never understand anything from the chart. For my charts, it should be clean. There is nothing. There is the candlesticks. There is the prices. There is a resistance line, support line. There are trend line, and there are other criteria that it is hidden. I see them because it is my criteria, and I show to my students. If you see this, it means this. If you see this, it means this. And you should see, like Saba said, you should read the chart. For me, I read only the words. I don't see a chart. What is it? I don't read a book with pictures. I don't read the pictures. I read just the words, what's there, okay? Now, Magthira said, with 3-day trades on Robinhood, stop loss and getting back on is hard for me. I end up beating my nails. Yes, listen, I just explained the stop loss. I told you that most of the people now, they don't use the stop loss, but they exit. It means you should know where to exit, but they don't put physical stop loss because it is no more good. Because the brokers and they exit you without your permission. Without your permission, they exit you and they say to you, because it's the bid and the ask is very wide. That's okay. But I told them, okay, Facebook or Apple, they don't have a big spread. That's only 1 cent. How can you go to $1, $2 and exit the trade? And this price doesn't exist in real, as I explained in the beginning of the lesson. Okay, so guys, the most important thing I will tell before we finish, because for me, I'm not going to stay too long because the subject is very small. I don't want to take too much. So the most important thing is, if you use alerts from your broker, put the price. For example, you bought the stock at $20. You put stop loss at $19.90. It means 10 cents. Just an example, okay? You can put whatever you want, but the explanation why or where you put it, you should go to training level 6. How to protect your trades using stop loss. I will show you why you put in that and why you don't put at that price. I will explain the guidelines to use. But in general, when you decide when to exit a trade, for example, 1990, you can do alerts from your broker. Most of the brokers have free alerts. You have 6 stocks. You put alerts where you want to exit, and then you put them in your broker, and he send you text message, for example. If he send you text message, you are at work or you are at lunch or you are in the afternoon or whatever, you see the message, you take just 2 minutes, you enter, you exit the trade. That's it. If they sent you and after a few minutes the stock goes up and it's not in your, for example, in your stop loss, so just leave again the stock. You don't do nothing. Because for me, why I should exit a trade? I should risk the amount that I want to risk. You should be careful of that. For example, if you buy a stock that is, let's say you put $2,000 in a stock. The stock is, let's say it is $20. You buy 100 shares. You want to risk $100. Okay, you risk $100. If you go beyond that, you exit the trade because you see that you are losing more than what you want. Because I understand that the market will not tell you when to exit. It's your responsibility to exit wherever you want to exit. Because the market is neutral. If you make money, you don't give money to the market, to the exchange or to the broker or to market maker or to someone else. You don't give them money if you succeed. But if you lose also, you don't give, no one will help you. So you try to help yourself. There is no one who help you. Either, for example, I help you because I understand this. I will show you what to do. Even in the future, you will be realizing that what I said in the past is real for you for many years. You can add some criteria, you can move some criteria, it's not important. But the basics of trading is all the same. That's why almost all the people who make money, they use the same thing. It means the same basic principles. That if you are losing money, you should exit. I give always this example. Always. If you are like, let's say you are working outside and you cut your hand. The blood is coming out. What's the thing that you should do? What? You go by nature. By nature, you go and you want to hold your hand and to stop the blood. Now, why you stop the blood? Why you let the blood going out? It's nothing. Because the blood, when it goes to your vessels out, you lose blood a lot. If you lose a lot, you will faint and then they will take you to the hospital because you don't have that much blood in your body. So it is natural. But some people, they are mostly beginners and intermediate. He is in a trade. He began to lose money. Then he stayed the next day, then the other day. Because he said, like someone before, he told me this idea. What did he tell me? He told me if you don't exit, it means you don't lose. I say you buy a stock at 100. Now it is $2 and you don't lose until you exit, until you go bankrupt. So what does it mean? What are you doing, man? It means ideas are false. What you see is if you don't get out, you get burned. I have seen stocks, I told you, stocks that have been 100. After a few months, they go to $2, to $10. You bought it at 100. Now it is $2 and you tell me you are not losing money? Because there is this idea of stubbornness. You are stubborn. You said, okay, I lost money, but next day it will go up. Next week, next month, next year. It means you are playing. You are not trading. And you are not investing because you begin trading. Or for example, sometimes I see some people, they do it, some day traders. He told me, I begin to trade in the morning, I lost money. So I said to myself, let it for tomorrow. I say if you hold the stock for tomorrow, this is called swing trading. This is not day trading. So explain to yourself, are you doing day trading or are you doing swing trading? Swing trading is when you hold for the night to the other day. It's not day trading. Day trading, you should get your loss when you are trading. You make money, you don't make, you exit. You don't hold your money for at night. This is called swing trading, and swing trading has other techniques, other goals than day trading. Day trading, you see the fluctuation in the day, going down then going up, you can make money, or going down in the morning, going down, you make money. Fluctuation of the day. But swing trading, we are not looking at fluctuation in the day. We are looking for the trend. The trend can stay many days, many weeks, many months. As you can see, if you go to my subscription, we bought Facebook and Apple in end of March, beginning of April. We stay until I think September, and we sold them. Okay, so we make a lot of money, but we follow the trend. It's not only 2 days or 3 days and I sell. Or I lose money and I stay. No, I don't want to lose my profits or to lose my money. And all the things are explained. That's why my subscription, for those who want to understand really how I trade, you can follow the trades that I have done, because they are done in the day. For example, if I buy a stock today, at night I make a video. I say, okay, today what is it? Today is 5 October 2020. Today, here is its chart. See the price. It means I can't lie about this. People, they see me. It means they watch the video at night. Tomorrow, it can go up, it can go down, and they see if I hold it. I say I hold it 4 days, many weeks. If I say I will sell it, they will see I said I sold it, what time, why I sold it. All these reasons are explained in full. And even if someone has a problem with the stock and he doesn't know what to do, most of my students, they contact me by email and they give me all the information about the stock, and they say, Kareem, what should I do? I got stuck in this stock. So I will just give him suggestions what they do, but they should change. But if they follow my strategies, they don't ask me, because if you follow my strategies, you know what to do. But if you are trapped in something that you don't know, sometimes, for example, you have a gap down. You have a gap down and you tell me, oh, Kareem, what should I do? Man, you get caught. Now, but for me, I ask you not to get caught before the earnings. You should decide what to do. Why you stay and then when you get caught, you email me, because I will tell you to exit. Well, there is nothing I will tell you. What's the thing I will tell you? You have a big loss. Okay, so this is the main thing I'm teaching in theory. Like in my training, my trainings in theory, I will give you practice, and the practice is real. Today, Mag Thera said, today, stop loss, 7 stocks, just to trade one. It's too easy and more fun. Now you can, it depends what you are doing. If you want, for example, to buy only one stock with 10% of your money. Because I tell you always, don't put all your money in one stock, because there is a big risk. Suppose that you have a gap down. Suppose that you have a bad day in the market. If you put one stock, put all your money, yes, you can make a lot of money. Yes, it's true. But let's say you put all your money in one stock, $10,000. I have seen this year, some people, someone put $11,000 in one stock. The next day, it goes 300, then it goes to 500% in 2 days. There are 2 gap ups, but this is extremely rare. But 2 gap ups. One of my students has bought a stock at 7. Next day it goes to $60. You will never believe, but it happens. It happens. And the guy sent me the picture because the guys, why they don't they lie about this. They say a picture screenshot of his Robinhood thing, and they say, look, it is 700 or 600%. I bought it at 7, and I look at chart, it's right. So understand, guys, that things can happen, good or bad. But sometimes a stock, you put all your money, it goes 90% down. So you lose all, you put 10,000, tomorrow you will find 1,000 or 2,000. This is real also. So this is a big risk. I will not do this kind of trades. Whatever I traded before, I will not risk that much money, because you risk 100% of your money. It's like you are doing options. Either you make a lot of money or you lose a lot of money. But I don't do that. I don't do that because it's because of my risk. Potato Bag say, yep, stop loss is very important. I traded one without stop loss and will not do it again. Yes, but understand, Potato Bag, that you can put sometimes when you put stop loss, they exit you without wanting to do that. I have just explained. But you can put alerts and you get a message from your broker. Sometimes when you get the alert, the stock goes to your stop loss and you don't put physical stop loss, you can just go enter to your broker and exit the trade. Some people, they do that, and I give them this solution and they are using it without putting stop loss. But sometimes it is a bad day. If you don't do that, sometimes it will be bad day. Even there is no gap down, but you see a very red candlestick. But sometimes it's a very good day. Okay? So guys, I don't want to stay that long in this live. So because the subject is very small. Now it's very good, guys, to see you. If you have questions or you have, you can send me an email. There is also my Facebook. If you want to send me, you can go and put my name in Facebook, Abdelkarim Ramain. Then you send me a message without being my friend or something. No problem. Just send me a message if it is real, if it is very good. You say, how are you, Karim? Pablo, I am going to end the live right now. You come late. Okay. So, or you can use my email, or you can go to my website and check everything. You can click that and you can check what's going on. Now, Potato Bag, what is best stop loss strategies? Now, stop loss strategies, I explain in the training level 6. Training level 6. You should get that. Training level 6 in ebooks or in or in by videos. You find them in my website, into training, by ebooks or by videos. Please go there and check. Okay? So I don't train people here for free. No, it's a training. Thank you very much, Potato Bag. Messenger better than email, but Facebook, good stock. No, we get a lot of money from Facebook, Tesla, and Apple, and other stocks. We get a lot of money. We are lucky this year, so it's very good. ATR. So I am sorry, Potato Bag, because I have a problem with the chart, with the other thing, with this OBS. So I should fix it, because I don't go to the chart, because it doesn't let me go. I don't know what's the problem. I should I should see my son to fix this when he comes. So I have no idea why. So I can't show you. I can't show you anything from my chart for this time. Okay. So potato bag next week, or send me. Okay, send me your send me an email or send me by Facebook a message and ask me any question. I will show you the a screenshot and I will show you this ATR because my OBS, this software is not working today good, and I can't show. I always show the chart and the explanation. I can't do that today. Okay, so thank you guys. Thank you very much. You can, as you know, you can send me an email or go to Facebook and send me a messenger Facebook, or you can go to my website and check what's going on. You say Webull has paper trading. Okay, I will check it. I will check it. If it is good, I can make a paper trading. Yes, if you said it has one, we can check it, because E-Trade is bad. When there is the split, it doesn't give us our money. So when there is a split 4-1 for Facebook, we have 50 shares. Instead of giving us 150 shares, it means we will have 200 shares. From 50 shares, it will become 200 shares. Now you see that there is no shares. There is only 50 shares, and it shows as a loss of I think 75% loss in Facebook, which is stupid. Okay, that's why I delete this thing. You say, I don't know if it will fix the stock split problem. Yes, I don't know also. That's why it's very, very hard. Okay? So thank you very much, guys, for all coming back here. And next week we have another subject. If you have other subjects to say, let me know. Harman, man. Hi, Karim. Hi, thank you very much, Harman. But I am going to end the session today because we have only 1 hour. Thank you very much and see you next week.